Well have imagined and expected that particular sector to have keyed off that. There's energy, fairly one-way traffic to the downside. Let's get insights on both of those spaces. Pete McGuire, CEO of XM Group, live in our Sydney CBD studio. Pete, welcome into the show. Kicking off a discussion with energy. Firstly, we had been reading out and calling out some good support today that seems to have passed us by. For what reason?
Well, good afternoon, Carson and team. The crude market, when you look back over probably the last 2 and a bit months, Carson, it's nearly up 1% a day. It's about 70-75%, so it's been a strong, dramatic run. I think it's probably just having a little bit of a breather, though overnight it just continued the volatile trading nature. If you look at what the hedge funds are doing, they seem to be, gathering momentum to the upside, though we've had a couple of disruptions when you look at, the likes of the Libya and Nigeria as far as production numbers. So taking all that into account, I just think it's just going to continue those volatile trading swings.
Ditto iron ore or some more durability there to the upside?
Oh, well, yeah, I think, if you roll it across to the ores, and of course, yes, certainly you're going to see continued, price movement there and large swings. I think you've got a couple of factors that play into that, of course. Take on board the US dollar, what's happening with our dollar, and of course, the demand picture coming out of China.
Peter, it's John Milroy from Ord Minnett.
Yes, John.
Just a quick one on the base metals, things like copper and nickel. They seem to be having a pretty good period here, don't they? I mean, there's been a couple of interesting days trade.
Well, exactly right. I mean, they've had a nice run up over the last week, and that's all off the back, of course, what's happening with the energy sector as well, John. So, it's rising all boats, and it's been a nice time to, get on that momentum. The big boys, as far as money managers and hedge funds, have been right across that, rolling across, of course, to the precious metals and where silver's run. So, big positions out there, and many traders have had a very, very nice time over that period of April.
Expectations also being pushed out increasingly on the Fed's tightening timetable. Now, that's only going to, of course, see the US dollar remaining in this relatively weak position, which is a good backdrop play on a lot of these assets, not least of all bullion.
Yep.
So how much of it is really basically exploiting that versus a call out on what Indian demand picking up, or what are you seeing more broadly?
Well, yeah, exactly right. But I mean, when you look at it, Carson, when you think of what happens as far as Goldman Sachs and their views, they're saying 3 months' time you're going to see gold at around that $1,100 range, and in a year's time they're very, very bearish, and they're saying $1,000 an ounce. So whilst we take on board where the US dollar is, many people have differing views as far as what Yellen's prepared to do. Take on board what the BOJ. April was a outstanding month to be long across silver and gold, and of course any of those other precious. So I think that at the moment it's hard to stay in the way of it. Big positions, largest on record as far as silver for hedge funds or futures and options. So it's a very, very wise trader to stay with the momentum, and if you can get, you go on the wrong side, you can quickly get taken out.
Peter, Mark Todd here from the NAB. Where do you see value at the moment in the asset classes? Where do you think, okay, gold's rallied hard, silver's rallied hard, go with that momentum, or do you say, look, hang on, this is an unloved piece, it will come back because of where cash rates are now going globally?
Well, you can take on board, John, Mark, when you think about what's happening with the sugar market, for instance, that's up 40% as far as Indian costings since October 2015. Globally, it's about 23-24%. We've had a very strong rally in the last month or month and a half across corn and soy and wheat, and they're worrying about weather conditions. We've got record dry conditions. If you look at India, we've got temperatures over there in excess of 50. They're transporting literally millions and millions of litres a day of water. We've got very dry conditions across the US as well, so that's all having an impact, and people are saying, are we heading into an El Nino as far as, large weather disruptions, and this could be the year that you're going to see volatile hurricanes and so on. So I think at the moment I'd have to be long that grain side, but be very wary. Things can change quickly.
Well, okay, there's no accounting for Mother Nature at that particular point, so what we also have to wonder out is connections with what China's trying to do. This Kidman sale's been blocked domestically, and I'm just wondering how you see its march on trying to shore up its food security. It's been a big theme this year. They're trying to shore up via these
Right
asset
across
purchases.
Africa.
Yeah, Australia says not welcome though. How do you see that playing out internationally?
You know, I think, well, Australia's got its own views, and certainly, you know, but it's hard to get against, pardon me, to fight against the might and the might of the yuan, and they're very sensitive to taking on board when you look at, you know, cheaper production coming out from even manufactured goods as far as linens and so on out of Ethiopia. So Africa is the new gateway, of course. China is right across it from all forms of grains, and you know, it's just Africa is a new frontier on everyone's radar as far as mining, of course. Precious metals, huge, surrounded by water, so there's going to be great oil finds in years to come, I'm sure. And you've got those vast tablelands of, you know, planting and as far as crop production. So I think that's going to be the saviour in a lot of ways, Carson, for the China situation, and that will only increase from a spend capacity over the years and decades ahead.
So that means, therefore, the Kidman sale is just, you know, part of normal business where we don't, you know, trying to help me understand that strategy. I mean, is it just something that you think is appealing to the easiest way to win a vote? Is that what we're thinking, or is there enough policy, in other words, is there enough policy taking place to have a clearer understanding of what the foreign investment role is in you know, developing the economy and the country?
You know, like it's leading up to an election, and of course it's a very, very volatile point to a lot of people, you know, as far as the Australian public's concerned. Government has its own views on that, and how it plays out is going to be quite intriguing. But when we take on board what the capacity is as far as China and what it's trying to do, from dairy farms, taking on what it does across other nations in the Pacific, it's a hard one to speculate on where they actually, where it ends up. And I wouldn't be surprised to see more conjecture and more problems, I should say, for that whole situation. I'm not totally across it, but I understand the volatile sensitivity to it, and I think that there'll be, you know, further issues ahead across that whole sector, and I can only see China's capacity increasing to try and get more of a foothold really across Australia and other sources.
Watch this space.
Watch this space, right. Exactly.
Talk to you soon. CEO of XM Group, Pete McGuire, there live at our City CBD.